Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks for Tuesday the 7th of June. Starting off with Armadale Capital, and here you can see that there's been consistent support here at the floor of this falling trend channel from December. Quite a sharp uptrend line in the RSI window as well, and a breaking above the 10-day moving average at 1.45 pence after a hammer candle on Friday. Bit early days obviously at the moment, but chance of at least an intermediate rally to get us to fill that gap down to 2.38 pence, top of that gap there from May, even if the shares then fall back again. Probably the key level over the near term will be 2.06 pence, which was the initial May support. That makes for the first target here before the gap is potentially filled. Best case scenario is that over the next month or so we head up to the top of this falling trend channel from December. Stop loss back below the 1.4 pence zone. Perhaps 1.3 pence would be suitable given that it's the intraday low of Monday. On to China New Energy, and although we shudder to look at stocks with the word China in them, at least it can be said that here the shares have been quite persistently strong. From a technical perspective, golden cross buy signal to start June between the 50-day and 200-day moving averages, and you can see that for the start of this month we've had price action at or above the 10-day moving average at 2.54 pence, so quite a strong show there on a technical basis. The view of this stage is that at least while there's no break back below the 2.5 pence zone, we could see a retest of that initial June spike towards 4 pence over the next 2 to 4 weeks. Any dips in the meantime towards the 2.5 pence zone regarded as buying opportunities, if only to cool off the RSI, which is overbought at 75. Another stock where we've been in the brace position once or twice over the recent past, but Golden Saint gap through the 200-day moving average, which is a very strong buy signal, surprisingly strong, and then we've got this consolidation here, sort of V-shaped consolidation come through now for the start of the week. Also multiple support points along this extended January RSI uptrend line based at 50, double bounce off that over the last week or so. So basically the technicals counteracting any fears you might have about the company on a fundamental basis. What could happen next? Well, basically above the 50-day moving average at 0.06 pence, we could head as high as 0.17 pence, which is the top of this August rising trend channel from last year. Higher Natural Resources, rather, the next stock up here, and a bit of a lap of honour given the way that this has been called higher from the low 20s. Hasn't really looked back. We had, I suppose, that pullback from 60 to below 40, but that bounced off the 20-day moving average quite strongly. And really, while we're above the 20-day line now at 53 pence, looking for a partial or even full retest of that 80 pence intraday peak from last month over the course of the rest of June. RSI, interestingly, only at 63, so not overbought, and has bounced twice off the uptrend line there from April, so that is a possible leading indicator on future upside. Next up, independent oil and gas, and here, in fact, probably one of the more strong setups, or the strongest setups of the recent past in any of these minnows. The reason for saying that is that this massive U-shaped turnaround that we've had over the past couple of months. Unfilled gap to the upside there, noticeable there as part of that U, so very, very strong price action indeed. We already had a target of 22 pence for this stock given last month, and that's still waiting in the wings, let us say, over the next week or two. Best case scenario target here as high as 32 pence over the next 2 to 3 months, which would be the top of a rising trend channel from May last year. Moving along to the next stock, which is Orosur Mining. Here we've got a sharp rebound, bear trap rebound off the 50-day moving average at 9.71 pence, just about to clear the 20-day moving average at 11.5 pence. That's the grey line, and end of day close above that feature should be enough to give us a new leg to the upside as high as 16 pence, which is the top of a wide rising trend channel from as long ago as October and November 2014. Stop loss back below 9 pence at this stage. Time frame the next month or two, possibly less, and probably another point to note is the way that the RSI is just pushed back above neutral 50 to 55, which is a decent leading indicator on fresh upside. Next stock is, to finish off, in fact, is TyraTech, and here we can see another U-shaped turnaround here, quite a sharp one. Very interesting that we had the breakthrough the 200-day moving average in April around the 3 3/4 pence level, and since then we've remained at or above. In fact, we've remained totally above the 200-day line, which is pretty strong performance given that there have been two major tests for support over the course of May. The view is that as little as an end-of-day close above 5 pence here should give us a new leg to the upside as high as 8 pence over the next 1 to 2 months. Any dips in the meantime back towards the 50-day moving average at 3.89 pence regarded as a buying opportunity in order to improve the risk reward and also to cool off the overbought RSI at 76. That's it from me. More updates at the same time tomorrow.